friends, here is a problem of hire purchase accounting. Look at here. On 1st January 2009, the ABC company bought a machine from HMT Limited on hire purchase system. The cash price was rupees 26,350 and payment was to be made as follows. Rupees 10,000 on signing the agreement and balance in 3-year installment of rupees 6,000 each and 5% interest charged by the hire vendor. Full stop. Calculate the interest for each installment. Here is a summary of the problem is the cash price of the machine was rupees 26,350 and rupees 10,000 on signing the agreement. It's a down payment given at the time of agreement, signing the agreement, and the balance remaining will be paid 3-year installment of rupees 6,000 each and along with the 5% interest charged by the hire vendor. So you need to calculate the interest for each installment. Clear? So before going to solve the problem, we need to know whether the installments amount are included in the interest or not. Let's see here. The cash price of the machine was rupees 26,350. Clear? So down payment is rupees 10,000 at the time given at the time of signing the agreement. Then 3 installments, it is also given in the problem, at 6,000 each, that is 6,000 into 3, how much? 18,000 rupees, 18,000. So total will come to rupees 28,000. Here the cash price of the machine is 26,350, where the installment amount including down payment leads to 28,000. It indicates that the interest amount included in the installment. Now clear? Okay. So down payment. Here rupees 10,000 on signing the agreement, nothing but the down payment. Clear? So installment amount, down payment how much paid? Rupees 10,000. For there is no balance. Clear? For unpaid cash balance. Clear? So interest also nil. Then the cash price given by the hire purchaser to the hire vendor is rupees 10,000. Next, the first installment. Here balance in 3 installments of rupees 6,000 each. Each installment consisting of rupees 6,000. Clear? So write here 6,000. What it call? That is 6,000 is a installment amount. The unpaid cash balance is, the total balance of machinery is 26,350 minus down payment paid, already paid, right? 10,000. So the unpaid cash balance is 16,350, right? On that 16,350 you have to put the interest rate that is given in the problem, 5% interest charged. Clear? On that 16,350 you have to put 5% interest. 16,350 into 5% interest leads to 817.5. Make a round figure, 818. Clear? After that, deducting the 6,000 installment amount which has included interest also. So deduct interest from installment amount. 6,000 minus 818 leads to 5,182. This is the principal amount, nothing but cash price towards the machinery. Clear? The next, second installment. Again the second installment is also rupees 6,000. So 6,000. Clear? After that we need to calculate the unpaid cash price. Clear? So 6,000. From that 11,350 we need to deduct the cash price. We need to deduct the cash price. So 16,350 minus 5,182 leads to 11,168. 11,168. On that 11,168 you have to put 5% interest. 11,168 into 5% makes it 558. 558. When we deduct the interest amount from the installment amount, we got the cash price of rupees 5,442. 5,442. Next, the last installment, third installment, which is also 6,000 rupees, right? Which is also 6,000 rupees. Clear? We need to deduct the 11,168, the cash price. Clear? So 11,168 minus 5,442 leads to 5,726. 5,726. So it's a lost. In the last year we need not to put 5% on this. We take a difference of 6,000 and the unpaid cash price. In the last year we need to take the difference of installment amount and then unpaid cash price balance. Clear? So 6,000 minus 5,726 leads to 2,274, the interest amount. Not put 5% on the amount, take it as a balancing figure, 2,274. When we deduct 6,000 minus 2,274 leads to 5,726. Clear? So last, make it total. So 10,000, 6,000, 16,000, 16,000 plus 6,000, how much? 22,000. 22,000 plus 6,000, 28,000. 28,000. When you get total these interest balance, we got 1,650. 1,650. When we get balance the lost cash price, we got 26,350. It's a cash price of the machinery which was given in the problem, right? Which was given in the problem, 26,350, 26,350. What is the difference is that it's a interest included in the installment amount. In this problem they are asked to find out the interest amount, which was calculated here 1,650. That's it. Clear? Okay friends, let's move toward the next problem. Look at here. On 1st January 2009, Mysore Taxi Company purchased a car on hire purchase on the following terms. Number A, cash price of the car rupees 20,000, down payment rupees 8,000. Number B, balance to be paid in 3 equal installment plus interest on the outstanding balance at 6%. Asked to prepare car account, hire seller's account, interest account, depreciation account in the books of Mysore Taxi Company. Full stop. Depreciation on the car is to be charged at 25% on straight line method. So the summary of the problem is, here it is. The cash price is rupees 20,000 and then down payment is rupees 8,000 given in the problem. Next, the balance. How much balance will remains? from the 20,000 of cash price, when we deduct the 8,000 of rupees down payment, we got balance of rupees 12,000. The balance of 12,000 will be paid in 3 equal annual installment. Three equal annual installment, nothing but 12,000 divided by 3 leads to rupees 4,000. The installment amounts to rupees 4,000. Clear? So let's move towards the solution part. Before going to prepare the car account, hire seller account, we should make some necessary notes. Here it is, I made it notes. Clear? So installment interest, first we need to calculate how much installment interest is there. Clear? In that first particulars, unpaid cash price balance, then rate of interest, next installment interest. First we need to take the cash price of the car. First we need to take the cash price of the car. Here it is. Cash price of the car, how much given in the problem? Rupees 20,000. Given in the problem, rupees 20,000. From that we need to deduct less down payment of rupees 8,000 given in the problem. Clear? The remaining balance is 12,000. We said unpaid cash price. We say unpaid cash price. Unpaid cash price at the beginning of first installment. Beginning of first installment. On the unpaid balance we have to put 6% interest. He said equal installment plus interest on the outstanding balance. That is called the outstanding balance of the beginning of first installment. On that 12,000 you have to put 6% rate of interest. 12,000 into 6 leads to 720. After that we need to deduct the first installment less first installment. I said already now. So every installment consisting of rupees 4,000. Clear? 4,000. Next remaining balance is 8,000. So it's a unpaid cash price at the beginning of second installment. Beginning of second installment. On the this is the outstanding balance of the second installment at the beginning of the year. On that amount we have to put again 6% rate of interest. So on that 8,000, 6% rate of interest leads to 480. Next less second installment. How much second installment is there? Every installment is equals to 4,000, right? After that the remaining balance is 4,000. It is said that unpaid cash price at the beginning of third installment. The beginning of third installment. On that outstanding balance, again we have to put 6% rate of interest leads to 240. 4000 into 6%, 240. Lastly, less third installment. How much? 4000. So clear, here is 0. The total interest amount comes to 1440. 1440. After that, we need to prepare the installment amount and hire purchase price. Installment amount and hire purchase price. First, we need to take down payment. First, we need to take down payment. So here it is. Down payment is rupees 8000. On that down payment, no interest can be charged. Clear? So down payment amount will be 8000. Next, first installment. How much first installment is? Every installment consisting of 4000 rupees, right? 4000 plus interest already calculated in the, here it is. First interest is 720. Add together 4720. Next, second installment. So 4000. Interest amount, here it is 480, leads to 4480. Next, third installment. So every installment is a 4000, right? So interest is 240. 4240. In total 8000 and then 12000, total 20000. Interest 1440. Total amount, installment amount includes cash price plus the interest amount, leads to 21440. 21440. With that help of these information, we can easily prepare the ledger accounts in the books of hire purchaser. Clear? Here move towards the ledger accounts. Ledger account in the books of Mysore Taxi Company. Mysore Taxi Company is a hire purchaser. Clear? So first we need to prepare the car account. Clear? First we need to prepare the car account. When the entry passed is car account, means assets account data to hire seller account. Assets account data to hire seller account, like that. Car account data to on first installment. On first installment on 1st January 2009, right? 1/1/2009 assets is taken, right? So car account how much? 20,000. On that car, the hire purchaser put depreciation. So here it is, depreciation. Depreciation on the car is to be charged at 25% on straight line method. In case of depreciation in the hire purchase system, depreciation on the assets acquired on hire purchase basis should be provided annually in the books of the hirer or hire purchaser. For determining the amount of annual depreciation, the hirer may use either straight line method, also called fixed install method, or written down value method, that is reducing balancing method. In this problem, the straight line method of depreciation is given. In this problem, the straight line method of depreciation is given. So the formula for straight line depreciation is cash purchase price minus estimated scrap value divided by useful life. So in the case, the straight line method of depreciation is also called original cost method. Original cost method. Here it is, depreciation is equal to original cost. How much? Rupees 20,000, right? So this is original cost, rupees 20,000 into 25%. 20,000 into 25% leads to rupees 5,000. For everywhere, rupees 5,000 charge depreciation. For everywhere, the higher purchaser charged 5,000 as depreciation. Clear? So here it is, take by on 31st December 2009 by depreciation account. How much? 5,000. Depreciation amount. How much? 5,000. After that, we have to close the balance. Close the first year account. Total debit side total is more, 20,000. Here also 20,000. So 20,000 minus 5,000, 15,000. On 31st December 2009, by balance carry down 15,000. The last year balance will be opening balance for the current year, like so 1/1/2010, 2 balance brought down, 2 balance brought down. How much? 15,000, right? 15,000. On the 31st December 2010, again charge depreciation, right? Here is a original cost method of depreciation. There is no changes in depreciation. By depreciation account, how much? 5,000. Then you have to close the second year account. So 15,000, total 15,000. After deducting 5,000 from 15,000, we got rupees 10,000. On 31st December 2010, by balance carried down. Again on 1/1/2011, 2 balance brought down. Why we take here? It is the data is given for 3 years. We make for 3 years, right? So 2 balance brought down, 10,000. On 31st December 2011, by depreciation account, how much? 5,000. Every year the depreciation is rupees 5,000. There is no changes. 10,000, 10,000. Remaining balance is 5,000. Here it is, by balance carried down, 31st 12/2011. Till that the machinery or the car remains up to rupees 5,000. Next we need to prepare the hire seller account. Clear? So from that hire seller, the car is given, right? On 1/1/2009, by car account. By car account, how much? 20,000, right? Car account 20,000. Then on 1/1/2009 itself, the hire purchaser makes down payment of rupees 8,000 to the hire seller, to bank account. How much? 8,000. It's a down payment. Down payment. So then lastly, for the year ending 31st December 2009, he paid first installment, right, to bank account, along with interest. 4,720. So 31st December 2009, we deduct the interest from that by interest account. This entry made for the transfer of interest to the profit and loss account, 720. Clear? After the totaling, the credit side is more, 20,720. On 31st December 2009, to balance carried down, 20,720 minus 8,000 minus 4,720 leads to rupees 8,000. Balancing figure. So this last year closing balance will be the opening year balance for the current year, right? 1/1/2010 by balance brought down how much? 8,000. By balance brought down 8,000. So next, second installment paid on 31st December 2010 to bank account. How much second installment paid? 4,000 of rupees plus rate of interest 480. 4,480. Here it is. The second installment, total installment amount is 4,480. So by interest account 480. Clear? Again, the credit side is more, 8,480. 8,480. Then on 31st December 2010 to balance carry down, 8,480 minus 4,480, 4,000. Next, on here I also 31st December 2010, 1/1/2011 by balance brought down how much? 4,000. Next, 31st December 2011 by interest account, how much? 240, right? 240. Then last installment on 31st/12/2011 to bank account, how much? 4,240. Here is the installment. First installment 4,720. Here it is, 4,720. Next, second installment 4,480. Here it is, 4,480. Third installment 4,240. Here it is, 4,240. Principal amount as well as plus interest amount also included in the installment amount. Next, we need to prepare two more accounts, interest account and depreciation account. Interest account and depreciation account. Here it is, interest and depreciation account. So interest, clear? So we need to prepare interest account and depreciation account. Interest is given to the hire seller, right? So hire seller is the receiver. On 31st/12/2009 to hire seller account, how much? The first year interest 720, right? First year interest 720. This interest will be transferred to profit and loss account by profit and loss account 720. First year account will be closed. Then next, 31st December 2010 to hire seller account, second year interest is 480 on 31st/12/2010 by profit and loss account 480. Next third year, 31st 12 2011 to hire seller. How much? 240, right? On 31st 12 2010, sorry 11, by profit and loss account 240 240 240. Clear? The next, depreciation account. So depreciation account maintained by the hire purchaser. So depreciation is on based on the assets. Depreciation, the general entry is depreciation account debtor to asset account. Here it is, depreciation charged on every end of the year. 31st December 2009 to car account 5000. On that same date, transferred to profit and loss account by profit and loss account 5000. First year account will be closed. Next, on 31st 12 2011, again depreciation account debtor to asset account to car account 5000. On the same 31st 12 2011 2010, by profit and loss account 5000. Next, for the last year, 31st 12 2011 to car account 5000, and 31st 12 2011 by profit and loss account 5000. Here it is, 5000. How simple, na? This is the hire purchase accounts. Clear? Any doubts? So please comment me if any doubts. Thank you friends. Thank you for watching. Take care.